kind of a little refresher, remember, Social Security tax and Medicare tax for an employee is shared half and half with the employer, right? You guys remember what those tax rates were? For the, let's say for the employee and for the employer? Recall?
Like Social Security and Medicaid?
Medicare, yeah.
The total is 0.0765.
Right, so
So
we're,
it's 1.42.
Well, here, 7.65.
1.42 and 6.2.
So 6.2% for the employee's portion, 6.2% for the employee's portion, employer's portion. Medicare is 1.45%. For a total of 7.65%.
Close.
You were.
So 1.42.
1.45% for 7.65%. So, shared equally by the employee and the employer. You'll recall though, that self-employed individuals are both employee and employer. So for that privilege, you get to pay both halves as a self-employed individual. Now, so this together is 15.3%. Social Security would be 12.4, 2.9 for Medicare. So self-employed individuals in total have a 15.3% tax rate. This is over and above income tax, right? So if they're in like a 35% tax rate, well, and then they've got this on top of it, you know, we're talking pretty high tax rates here, almost 50%. But for the employer, when they pay this, they get a deduction. Like they file their own tax return and they're paying this on behalf of the employee, they're getting a deduction for that expense, right? As the employee, you're not getting a deduction, right? You don't get any, if you're just the employee, you're not getting any benefit for it. The 1/2 self-employment deduction is to kind of help equalize the treatment. So essentially the self-employed individual, this is giving them a similar deduction to what the employer would receive. Yes, they have to pay it, and that's that you have to pay the 15.3%, but on the other hand, you're gonna get a deduction for half of that amount that you paid. Because the employer would have got, if you were an employee, the employer would have gotten that deduction, right? So that's what the deduction for half of self-employment tax is. We cover it in much more detail in chapter 6 when we get into self-employment income, which by the way, I don't know if you've looked at the schedule at all. Chapter 6, we take 2 weeks to cover all of that because it is a hefty chapter. Personally, they shoved depreciation in there, and I think depreciation should be its own chapter because it not only applies to self-employment income, it applies to rental income and other types of business income, but they shove it in there with self-employment stuff. So that chapter we're going to spend 2 weeks talking about, and I think you'll all agree. Most of the students agree that's the toughest chapter, that chapter 6. Anyway, so remember as well, in addition to these taxes, we might have an additional Medicare tax on income. So if we have self-employment income that is over, where are we here? Well, it's actually $250,000. When we talked about this in payroll accounting, that threshold was $200,000. Remember, employers don't know if you're married or not, and so they just use that $200,000 as a, you know, it's kind of a preliminary, and then if you owe more because of your marital status or less, that's going to get adjusted on your tax return. These are the actual threshold amounts. So if you're married filing jointly, additional Medicare tax, if your income is over $250,000, then you get, and this is self-employment income, then your additional Medicare tax is 0.9%. You guys remember that additional Medicare tax part, right? And then married filing separately, it's $125. Single, head of household, and qualifying widower, it's $200,000. So Yeah, so employer is required by law to withhold the additional Medicare tax from wages it pays to individuals in excess of $200,000 a year. No, this is just, they're adding the 1.45 plus the 0.9% there. I didn't know where they were coming up with that 2.35%. There is an additional Medicare tax that we haven't talked about yet because it's only on the income tax form. It's essentially, it helps to pay for the administration. It also helps to pay for the administration of Obamacare, called the net investment income tax, which we will talk about as well later. And it has to do with usually higher income individuals who have a lot of investment income. So that would be like dividends, interest, that kind of thing, capital gains and all that stuff. Also recall that self-employment tax is a regressive tax, meaning once we reach a certain income level, and I think in 2022 it was $147,000, Social Security tax no longer applies, right? Then that rate goes down to zero. Medicare tax always applies, right? So for income up to, from 0 to infinity, you got the Medicare tax, but for Social Security tax, at least in 2022, it only applies on income up to $147,000. So once you reach that $147,000, that's a pretty big savings, 12.4%. Right? Now you're not paying that 12.4% portion. So something to aspire to, right? Making above that threshold. I think it's closer to 160,000 this year. They keep moving it. It's like it's just like it's constantly out of reach. Well, it's out of reach anyway, and it is on an individual basis. That cap. Okay, so that is everything for self-employment tax. So again, and it's 1/2 of it. So you would calculate the self-employment tax on one form, and there's an actual spot on that form to indicate what 1/2 of that is, so that then you would deduct it on the Schedule 1, Part 2 of the Schedule 1. Okay? Questions?